Go.
Awesome. So we're live in New York City, guys. This is going to be the last broadcast from New York City. It's been very good to us. I had no intention whatsoever of starting a YouTube channel, but I've got two very special guests who wanted to also say goodbye to New York City as well. They're a couple of avid investors, thanks to their father, who got them invested very, very young. That's
Rabbits, goodbye, New York City. Goodbye, YouTube.
All right. He's don't down, stop. He's still in training a little bit. I didn't script that. Everybody knows we're unscripted here on the Independent Investor Channel. Go ahead, Kendra.
Bye, Staten Island. Bye, everything. Bye, Staten Pool.
Okay, that's good. Okay, guys, hop up. Say goodbye.
Bye, unicorn.
Say goodbye nicely.
Goodbye. Bye. Bye.
All right. You're thinking about.
Bye.
So we're live. It's about 9 o'clock in the evening here on the Eastern Standard Time. Certainly a busy last couple weeks. So this will be the last broadcast that I actually make from New York City. I've got my first. Thank you very much. I appreciate that. They're still in training a little bit. They need to pay more attention to their dad. But this will be the last live broadcast from New York City. I do have another couple of videos that I'm actually excited to release. I don't know if I'll have a chance to get those released through the normal channels this week to you guys. First of all, I'd like to welcome all the new subscribers. Certainly, we've taken a little bit of an uptick on the channel. That's great. We picked up another couple hundred subscribers. Hopefully they are interested in getting the perspective that we have to offer on the Independent Investor Channel, specific to being a self-directed investor. But certainly wanted to run through and recap for you guys, really in my perspective, what we've been able to do in just over a year of the channel. Since its incepted. Trust me, I had no idea whatsoever that this was going to be an option for me. That the idea was brought to me by a family member that said, "Hey, this is something that you really need to do for people." And over the last year, it's done nothing but validate that for me. So I really just kind of want to run down the list. I'm going to allow the community to kind of come in here, get into the group. And while that's happening, I'd like to kind of run through some of the things that I'm most proud of. And number one really is just bringing a message of self-directed investing to people, okay? And I've always heard that when you do YouTube, you have to have a niche, okay? And when I watch other financial channels, the YouTube is really flooded because people think, okay, well, I've got a little money in my back pocket. I've got a Robinhood account. Somehow that makes me eligible to put out a YouTube channel and start teaching people. And I'm not necessarily sure if that's really the case. I was actually involved in finances at a very young age. And what I found really, really difficult is to talk to people who were much older than me, maybe had life experiences, that they had learned from and had nothing to do with investing at all. But I think those life experiences now, in retrospect, looking back and kind of having an idea about why there was some difficulty breaking through some of those barriers as a 20-year-old and talking to somebody in their 50s and 60s about investing, why you have kind of a difficult time doing that. And what it comes right down to is credibility. And I thought if you were going to have credibility in the stock market, you probably needed to have some years under your belt of practice. You needed to have some failures along the way that you could reflect on, having learned from those failures. But investing in the stock market, I don't think is enough. I don't think just because you invest in the stock market that you can think that you have some sort of individual program that needs to be pushed out to people and it's going to benefit people. And that's kind of one of those things I'm most proud of is I still have people raise an eyebrow and say, What exactly is this self-directed investing thing, Ryan? I don't understand. Can you please understand or explain to me what this means? And a lot of people are interested in investing. They just don't know how. And I'm quite certain that it's been really kind of a dual mission of mine to not only introduce investing, and I say all the time, investing isn't for everybody, and I truly do mean that. I don't think investing is for everybody. But for those folks out there that really do want to take charge over their financial, future, um, investing can really make a lot of your goals happen. Now, the problem is, even with that drive and willingness to get started in investing, a lot of people seek out what is traditionally understood to be the only avenue in the stock market, and that's to go sit down with a financial planner, have them put you into their plan, and that's really it. You go in once a year and you talk to them, and that's kind of it. And you get your half hour with your financial planner a year, and that's it. Your money goes to sleep, and that's it. And when I came out with the channel, I really wanted to talk to people about an alternative way of going about investing. And when I started 7 years ago as a self-directed investor, it was a scary prospect. It really was. But I knew in my heart that it was the right way because I wanted to take control over my finances. I did not like the delay in picking up the phone and saying I wanted to execute a stock trade, or I didn't like the time that would elapse between wanting to take profit in a stock and having to run through an intermediary to execute that trade, okay? And what I found in self-directed investing is that direct access is something that is only made possible by the technology that we have nowadays. The free flow of information, right? The introduction of the smartphone. Guys, you have to remember, I remember back in the day when the first cell phones that I remember were the size of a brick. And for you guys that are my age, you guys can remember this. There was no smartphone, okay? And it's amazing the power of the smartphone and how it's been able to evolve and be so dependable insofar as making self-directed investing so accessible to people nowadays. And I certainly don't want to undertone or underscore the importance of why it's possible nowadays. And that's why I feel like just bringing this topic to you guys, I've really done what I kind of set out to do about just over a year ago when I started with 0 subscribers, and now we're approaching 5,000 subscribers. And that's really goal number one. The niche on the channel will always be about self-directed investings. And the cool thing about it is the topics that spur off of talking about this are infinite. They really are. Because if you just continue to talk about the same investing norms, and people ask me all the time, what account do you use? What method do you use? All those questions are generated. And if we answer those questions and put the self-directed hook on it, it really does provide a niche piece of content that people really can resonate with. They can really perk your curiosity if you've ever been interested in taking control of your finances, all right? Number 2 is really just a couple of terms that I've introduced on the channel, and by doing the channel, I've evolved in explaining these 2 topics. And I answer questions all the time about these 2 terms, okay? The first is wealth preservation, and the second is tax protection, okay? We seek out tax protection by the sheer nature of starting a Roth IRA for ourselves. From anybody out there that has 0 to 5,500 to invest in the stock market, which is the majority of people, and then anybody that has an annual income of 128,000 or less, which is also the majority of people that we look to capture, we really want to exploit the importance of the tax protection in the account, because you figure if you contribute 150,000 to an account, but due to cumulative growth and compounding interest, you end up having 750, 800,000 in that account. The question that I always pose to people is, wouldn't that be nice to reflect on your decision to tax protect that money upon inception and be able to go into that account and take proceeds without the government touching one dime? Now, I understand telling the future is not possible, okay? But set yourself up for success in the future by reflecting upon your decision to enter into the stock market in a way that says, look, I anticipate being 59 and a half someday. I know that I'm going to have the opportunity someday to look at my account and say, hey, is it eligible for withdrawal? And at 59 and a half, it is just that. And the Roth IRA provides that. All right. Now, most people understand the importance of a Roth IRA. A lot of people in my audience already have a Roth IRA started. The problem is that, and a lot of people don't understand this. I didn't understand it when I started a Roth IRA, is that you feel like you're doing the right thing when you go into a financial planner and you say, I want to start a Roth IRA. And they say, absolutely, we can get you started. You start the account only to subject that account to the stranglehold of fees. And that's where I introduced the terminology to talk about the importance of wealth preservation. It doesn't do us any good for you to take your God-given right to start that account. The benefit, the very benefit that the government has bestowed upon hardworking Americans to start, and some other countries as well, but to start the account to provide yourself that latitude for hard-earned dollars to go into that account and be protected from the government over time. Right? It allows you to pay the tax on the money up front, basically. And where a lot of people falter is when they start that account, right? The financial planners are over there licking their chops because yes, you will be tax protected over here. But if you opt into the fee schedule that they have with the management, you've already lost the battle. Whatever dollars that you accumulate over here, or whatever year over year percentage of return that you get in this account over here is only going to be subject to the fees over here. And it's going to reduce your cumulative return year over year. And the longer that you have that account, the more damaging effect is. And the problem is it's an inverse relationship in that a lot longer people stay with a financial institution, the more vested they think they need to be, the more loyal they think they need to be, the more rapport they have with their financial planner when they sit across from them. So those two terms are really, really important, and to seek both. And the wealth preservation piece is the piece that we're seeking when we opt out of the fee structure from the financial planners and we opt into putting ourselves in control of our own money. All right. Number 3 that I'm really proud of is the live feeds. We've only been doing the live feeds for a little bit here. I'm going to get to these questions here in just a second. I'm going to kind of allow the group to kind of make their way in here. Welcome to you guys on a Friday. It's very good to see you guys. But for me personally, I will not watch a YouTube channel unless I feel connected to the content creator. I won't do it. And make no mistake, I've always portrayed who I am on this. I don't get on here and put on a clown suit and dance around for you guys. I don't do that at all. I just lost my script. There it is. Oh man, there's a lot of people in here hitting me up, and I thank you. Welcome to you guys. But if you guys cannot connect with the creator, I really think that you're not going to get the optimal value out of the content unless you can kind of understand where I come from, how hard I've worked. I've been given nothing in life. You know, you guys know I talk about some of the pitfalls that I've had in my investing career, and it really kind of helps you guys connect with me. It helps you relate with me because I think a lot of people appreciate that I don't do YouTube for a living. I don't, okay? I have a regular job. I'm going to be shutting down the channel probably at the conclusion of this particular live feed this evening. So this will be the last live feed from New York, and it may be the last YouTube upload that I have from here in New York. So I want you guys to really kind of understand why I did the live feeds, and I've met a lot of cool people. It's just your weekly opportunity. If you had kind of a really jarring question or a question that you wanted to hit to me directly, it gives you guys that opportunity to do that. So I hope you guys appreciate it. I enjoy it. I don't script a thing when I come on here. I don't need to because I talk about my favorite topic, which is finances and the stock market. Another thing that I kind of offered on the channel this year that I've been very, very proud of, you guys know when I started the channel, I offered a direct help. I came out with a video and I offered up the opportunity for people to call me directly, and most of those sessions lasted for about 1 hour a piece. And I can honestly say that was probably the most fulfilling piece of work that I've turned in over the last year as part of this channel and putting myself out there. Those were some pretty intimate sessions, no doubt. Some people really kind of spilling their beans to me, and it really took that to get to the consensus about a way forward for a lot of those folks. And it's something that I really, really take to heart as being one of the real successes on the channel. Mind you, it had nothing to do with money whatsoever. It had everything to do with helping people. And these 25 people reached out to me directly. And I honestly feel like we turned a lot of value back to them. I'm going to get to my first question. Jake hit me up and he says, I got a buddy, he's got 100,000 in savings, but does not invest any of it, just lets it sit. What's the best course of action for him? I'm trying to get him to tune into the channel. That would help a lot. Honestly, I would kind of need to understand a few more particulars about that. But if he's a friend of yours, you know, $100,000 sitting in the bank, I mean, you're kind of going downhill from year in and year out. And a lot of people invest to at least attempt to outpace the 2.2% of inflation, right? So that $100,000 is losing, you know, $22 of value every single year as it goes by. And you think, okay, big deal. My suggestion for that $100,000 is, you know, depending on what their or your buddy's financial goals are in life, it would really behoove that individual, because you've got enough money there to max fund a self-directed Roth IRA account. That would bar none be the best advice I could probably give you to start. Sorry, had to do a little pest control. To take some of that, you know, $100,000, I mean, he's really sitting in the driver's seat. Certainly you don't need to take it and dump it all in the stock market right now. I think buying into the strength is really, really tough. You're going to have to be strategic with that $100,000, no doubt. But, you know, what's keeping your friend from taking a max funding schedule and taking $5,500 in a self-directed account? I mean, I contend it's the best way to invest in the stock market, bar none. I love when people argue with me. I had a hater on the Scribner video. It was really interesting comparing Wells Fargo to Enron. And as entertaining as that was to me, it really kind of reminded me how vast people are in their thought processes. You know, some are doom and gloom preppers, you know, that think that we're all going to hell in a handbasket. I think a lot of that has to do with really a short-sighted mindset of somebody who hasn't been maybe outside the country, or maybe something who's been bestowed upon. I don't know, sounded like a trust fund baby to me. I don't really know. But, you know, I don't know. What's the solution to that? Not investing in the stock market? I don't think that's a solution. And he was kind of beating me up for pushing stocks, which I also kind of took a little bit of offense to. But yeah, you know, tune them onto the channel. You guys aren't going to have any content, but I've put 175 videos online. I think some of the coolest videos I have are the ones that don't get watched all the time. Some of my favorites are the 43-page disclosure video that I pretty much go off on. I mean, you can tell my emotion is pretty awesome. I like my image is everything. I like my bait and switch video. Those are some of the coolest videos. I like the Crossroads. I say some stuff in the Crossroads that actually I was very proud of, and it really didn't take off. Really wasn't one of my more popular videos, but I loved that video. I was very proud of that content and delivering it for people. I thought that was really awesome. But, you know, if your friend is serious about investing, I would definitely tune them onto the channel. But we don't, you know, unless somebody is ready to invest in the stock market, I really don't like to press. I really like to meet somebody 50-50, because it's not my job to talk people into investing in the stock market, okay? Because the first thing they're going to do is they're going to look for an out. And once they get that out, they're going to be gone, and they'll never go back again, because I've provided them that scapegoat. I've provided them that opportunity to say, God, I heard it from a YouTube guy. Someday, you know, I invested hard, I invested in good stocks, and the stock market corrected 20%, and it's all their fault. You know what I mean? So I tend not to give advice to people who aren't really interested in taking and putting the advice to work. Now, I'm not saying you can't tune into the Independent Investor channel and watch me not deploy the information and get value out of it, okay? But I'm very careful about offering the information to you guys and making sure that you can actually deploy that information into the stock market. That would be the first thing, honestly, because I always put this information out there from a perspective that if I was back in my 20s talking to the 20-year-old Ryan, I would kill for this information. This information, I can tell you right now, a lot of people will come through the channel, and that's why a lot of people, I tell them congratulations, because if you do take this information and deploy it for yourself, you will always remember the time that you became a self-directed investor. It will stick with you forever because it's a life-changing decision. The monetary piece will validate that for you, but you will always reflect back and say, I made that decision. I made it based on referral, but I made it for all the wrong reasons. All the right reasons. I didn't understand it at the time, but now I understand why I did that move, and it was the best move that I ever made. That's the best move I ever made 7 years ago. So it's a good question. Thank you, Jake. I appreciate it. Happy Father's Day to everyone. I appreciate it. Good evening to all. Some of the guys on here, hopefully everybody in the group here was able to tune in to the dividends video, the collaboration that I did with Ryan Scribner. I was very happy with the content. To be quite honest with you, the content was awesome. I liked it. I thought it helped. It'll help a lot of people. Not necessarily because of the 6 stock picks I offered, but I was able to kind of interject a little bit about my philosophy on the stocks and what it means to be a stock investor. This isn't the end all be all of my life, okay? It's not. It's a very small part of my life because I've got a very defined plan, and I initiate that plan and I focus on implementing that plan. I don't necessarily focus on the dollars and cents and the nuts and bolts within the account. I focus more on the plan than I do the actual stocks and the money that makes up those stocks. But I was happy with the content. I hope you guys were as well. I was really excited just to say goodbye to him. We talked for quite some time before we even put down the content, and it was really cool. I'm just really proud of all of his success, and I'm proud that he continues to sponsor the Independent Investor channel because he really did. He told me offline that he really believes in the content, and hell, I wouldn't do this channel if I didn't believe in my content. There's no doubt. So I owe him a debt of gratitude. And thank you for all you guys that tuned into that message. I was proud of the content. And good evening to you guys. Big A says, great channel. I do my best. Thank you very much. I talk all the time about not talking down to people. I talk to people. I'm just a hard-working guy. I've worked very, very hard my whole life. I had my first job at 12 years old, okay? And I haven't stopped working. To be quite honest with you, at 40 years old, I'm getting a little tired, but I don't know. I probably have a good 20 years left under me before I hang it up and retire and do what it is that I want to do. And guys like me don't retire, okay? That's why a lot of people hit me up and they're like, I want to be secure in retirement. Well, good for you. I hope you get there. I can put you on a good financial road to get there. But I mean, let's be real. I think a lot of people are changing their definition of what they think retirement is. I think the old school mentality is that you run a race for your entire life and you get to your 50s, 60s, maybe your 70s, and you fall over the finish line and you retire. And that is not my perspective of what I envision retirement to be. I envision retirement to be really just an evolution of what I've done my whole life in doing what it is that I want to do. And I look at every day of my life as a preparation for that moment. And I'm living my life day to day now. Like, I don't look at the future as being the success point. I look at, everything that I've had in my life. I look at everything I'm doing in the short term, medium term, and long term. The whole thing is a success to me, So just to have a little bit of perspective on your program, man, really, really helps. Could you rank the following in order at current prices? United Technologies, 3M, and Honeywell. United Technologies, number 1. 3M I own. I don't own Honeywell, but I would change Honeywell and 3M right now at the current prices. So UTX, number 1. I would say Honeywell, number 2. I would say 3M, number 3. You could certainly, I did take a couple positions this week. I took position in Lockheed Martin, which I would add to that list. I like Raytheon as well in the defense subsector of the industrials. And also I took a position in Northrop Grumman this week as well. So those are some additional names that I would add. But any one of those 3 that you added right there, K97, could be great cornerstones in your portfolio. Great industrial holdings. Remember, we're aiming for 10% of exposure to the industrial sector. So thank you for that question. That's awesome. United Technologies is my favorite. And for some, Boeing is a no good right now. Boeing broke the 52-day movie, or 56-day moving average, I think, today. I was looking at some charts today on Boeing, and not good. I think Boeing might actually kind of continue down. It broke some technical levels within the last couple days, so Boeing's kind of off right now. But industrials, you didn't add John Deere or Caterpillar to that list, which I do believe are also really rich right now. Cummins, they've all just kind of run to the moon. But United Technologies is really one of those that has not participated. And I feel like it's an optimal company. Honeywell as well. So really good picks there. Good evening. I've got the Greenhorn Grill and Smoker. It's probably been on every single live feed that I've come out with. Man, I dig the loyalty. I really do. Came down to 32. I jumped in and bought 30 shares for $9.60. Thought it was a great time to buy. Yeah, I'm waiting AT&T out. I have 100 shares right now, and I'm waiting it out. I picked AT&T up at 36. I thought I was doing good because I watched it establish a little bit of a base in the low 40s, and thought I was getting a really good entry price at 36 and change, I believe. And I've watched it come all the way down here in the low 30s. I think I'm down 12%. I shot a video for you guys, my worst picks of 2018, and I own every one of them still. I'm holding on to them, and the majority of them were down in between 10 and 20%, not too big of a deal, but the consistent piece is I hold all of them, and AT&T was one of them. Really kind of disappointing for such a big company. I thought the Time Warner merger or the acquisition, excuse me, the favorable ruling that they got would have helped the stock. It actually went down, and it's slowly been creeping up the last couple days since the ruling came out. But I'm long the shares. I'm going to continue to get paid the 6% dividend, and hopefully the stock approaches that $40 level again and puts me back in the black on AT&T. But I actually think you got a great entry point on a good cornerstone, Doug. I really do. Just make sure you don't overexpose to the telecom sector. You shouldn't really have more than 3%. I would justify taking an extra 1.5 or a point or two of overexposure to telecom right here because you're getting such a good entry point. Comcast, I put in the same boat. Comcast is trading right now at 6.5 times. And Comcast is a good buy right here in the low 30s as well. I also bought into Litecoin. Oh, there's the gambler. There's the gambler that I'm waiting for. That's awesome. Yeah, I'm not touching cryptocurrency right now. That's just my personal choice. We'll see who's right or wrong on this crypto craze. It's really been beat down. I'm into blockchain technology. I'm really into the technology behind safeguarding transactions. I'm really into that. But as far as like a made up currency right now, that can be traded. I like the idea, don't get me wrong, but am I going to invest my dollars into it right now? No way. I'll let the dust settle a little bit and be fine doing so. I'd rather buy gold and silver, to be honest with you. It's the first time you've ever bought cryptocurrency. You need to keep me pulsed in on how you do with that, Doug, please. I'm very curious. I wish you all the best of luck in the world. Honestly, if I were going to buy crypto right now, I'd buy Ethereum and Bitcoin Cash. Those would be the two that I would, because I think Ethereum, the platform, if you've ever gone on there and checked out the website, it's actually very, very interesting. That's the platform by which all of these coins or initial coin offerings are built upon. and it's very intriguing to me. But I just think Bitcoin Cash makes more sense to me. It seems to be more accepted, more recognized. Quite frankly, it's performed better than Bitcoin, and that's probably where I would go with it. As far as buying Bitcoin itself, hell no, I'm not into it. I mean, I'd rather buy 5 shares of Google, to be honest with you. So that's just my opinion on it. And you guys that are out there, and Doug is a seasoned investor. He's been investing for a while. For new investors, I would certainly like to see you guys steer clear from the crypto craze. Be entertained by it like I am. That's fine. But you've probably got a lot of work to do on portfolio building, debt reduction, savings accumulation, things like that. Fundamental investing strategies. You don't need to be trying to play with cryptocurrency as a new investor, in my opinion. All right. And I know a lot of people would beat me up over that. That's fine. Beat away. That's fine. It's just my personal choice on the issue. I've got Rohan, who's a good friend of mine. How should one fund his IRA if he already has a 401k up to the matching amount set up with the company? How much percentage should be a passive asset, VOO, versus single stock in the Roth? That's a really good question. And this is why I provide the multitude of options that I do for people. And it really kind of comes down to whether or not you have a company sponsored 401k, because I talk all the time about that 401k or employee sponsored retirement account being that baseline. All right. And a lot of people stop there. They're like, okay, I invest, and I leave it alone. But what you're missing is the opportunity to start a self-directed Roth IRA account and attempt to not be redundant in that self-directed account. You can build that account. Mostly my account right now is stock portfolio, okay? I've told you guys I've reduced my position in VOO. I've reduced my position in VTI. I made money on both of them, okay? But because I have the TSP with the military, it justifies me being a little bit more aggressive on the stock portfolio side for both me and my wife. So I already have the baseline in place. Now I can invest over here, with some good quality blue chip companies and kind of look at that as, the top of my iceberg when I'm looking to build out my portfolio. And that's just the way I choose to do it. You can do a 50-50 blend if you want. Depending on the assets that you have in the 401k, you can take the self-directed account and you can split it up 50-50, or you can do more of a weighted passive blend with 75% in the ETFs and 25% in single stock. Or you can build just an entire stock portfolio where you take the $5,500 and you split it up across 4 or 5 single stocks. And you can do that. You can cover the first 5 sectors when you get started. So you've got your 401k over here, and you've got your beautiful self-directed account over here that's a stock portfolio. And that is the way to do it right there. You're setting yourself up with multiple income streams someday. All right. Let's say this outpaces right here, and this gives you the slow diversified growth over time the way it's supposed to. And those two can kind of work in context with each other. And that's a great thing. Most people stop over here, but I want you to really acknowledge the importance over here of setting yourself up on a self-directed account and looking to really kind of achieve some of that accelerated growth over here, owning some single stock. I think that really appeals to a lot of people. I think a lot of people need to also get over their fear of owning single stock. It's not scary at all. I've done it for years. I've seen them go down heavy, but certainly it's a lot more rewarding, and it'll give you a lot more potential for profit in the future, as opposed to your diversified assets over here in the 401k. Killer question. Thank you, Rohan. Appreciate. People on the chat might want to check out Amazon Mechanical Turk. I've heard of this. A way to make a little extra cash for investing or bills is directly through Amazon. Cool side hustle. K977, thank you. I remember when you mentioned this to me this week during our comment in the comments section. I appreciate that. I really appreciate that that suggestion. Thank you for the group. Mad Money, let's play Am I Diversified? No problem. Apple, Johnson & Johnson, Microsoft, Berkshire B, and ExxonMobil. If I had a buzzer, I'd buzz you in, okay? So it's really, really hard. You actually perk up an interesting, obviously you've got Apple and Microsoft in the same portfolio. That doesn't necessarily, and the game is played with 5 stocks, I get it. But certainly you could take and swap out the Microsoft or the Apple, which honestly, you don't have to do that. They're fantastic. I own them both. Okay. I also own Intel, Cisco, Google. I did sell out of Amazon. It ran up way too fast, but I own a lot of tech exposure right now, and I'm about 23% in technology. But to take Microsoft and swap it out with a UTX, now you're looking at a diversified portfolio because you got your financials in Berkshire, your energy exposure, your healthcare, and your technology. So that was kind of fun. Thank you. I appreciate that. That's very cool. I will premise this. It's very, very difficult to achieve what I consider true diversification by holding single stock assets. That's why I insist on having that 401k baseline or the passive ETFs as a baseline before you start strategically placing these cornerstones, which every single one of those are cornerstone stocks. Even ExxonMobil, I own ExxonMobil as well. The only one of those I don't own is Berkshire Hathaway. And I probably won't own Berkshire Hathaway. I love the stock. They don't pay a dividend. But for some reason, it just really it's not one of those stocks that fit into my portfolio right now. In the financial services sector, I'm actually happy to own Blackstone Group, ticker symbol BX. So that's what I own currently. There's talk on the street and all the research that I do on Blackstone Group that it should be a $100 stock, and I believe it will be there someday. So I just keep on accumulating the shares and taking the dividend reinvestment on Blackstone Group, and I'm glad to own it. It basically supplements, instead of owning a bond exposure, I just own the limited partnership in Blackstone Group, and it appeals to my aggressive stock mentality, so of wealth building. That's pretty cool. So I've got Officer Towers. Hey Ryan, because of your channel, I'm 22 years old, close to maxing out my self-directed Roth IRA, and I plan on doing this in addition to my future pension. That's awesome. You taught me to pay myself first. Thank you. Pay yourself first comes from Tony Robbins. Okay, it does not come from me. Comes from Tony Robbins, who's a big, big influence of mine. When I watch that individual speak, man, it makes me emotional. I just love him to death, and that's not mine. I did not coin that. I do pass that along to my subscribers because I love that advice. It's so true, because we always want to just place a bunch of shackles on our arms, and we're dragging our bills around with us, and everything that comes up, unexpected costs, things like that come up in life, and we always justify everything else in the world. You know, maybe a friend needs to borrow $50 every month, you know, and we're doing everything we can do to help everybody else and help everything else in our life, but we don't take the time to identify one small piece of our budget, and it can start with 25 bucks. It can start with $25. And I say this all the time. It's not about the $25. It's about the mental conditioning that you go through to earmark that little piece of dollar and strategically do it. So you yearn to pay yourself first over time. It's very, very important. If you're max funding your self-directed Roth IRA account at 22 years old, I'm a little envious. I really am, because it wasn't until about 6 years ago, I give you my best estimate at that I've been max funding my Roth IRA. So at 34 is when I started max funding my Roth IRA. And if you have any questions whatsoever about what that's meant for me, go look at my portfolio video. Make no mistake, I've built that over time. Okay, so this stuff does work. When I talked about the credibility piece and being able to sit across from an audience and say, look, if you want to follow my footsteps in way of my advice. Don't focus on the money and the stock holdings that I have. Focus on the plan that I initiated to end up where I'm at, right? And that's the information that you can take and deploy for yourself. And I find this all the time. When I look on a day-to-day basis at the account, I'm like, wow, it doesn't move. Wow, it doesn't move. Wow, what's going on? It went down a little bit. And it tends to get your mind away from the long-term thinking that you should be having in the stock market, because I look at it now and I reflect where I was 3 years ago. I'm up 35%. cumulative from 3 years ago. I just looked at it today. So I'm up 35%. I've got a year-over-year rate of return as a self-directed investor at just over 10%, okay? Right at 11%, 11.2, 11.3%. That's my year-over-year return. So not bad, pretty good. So, but when I look back at where my account was just 3, 4, 5 years ago, it's just amazing how it's accelerated. And I haven't really taken the time to acknowledge on a day-to-day basis how far it's went. And you can do it too. Anybody can do it. Anybody who tunes into my channel and really pays attention to the message, if I were tuning into my channel and I were a new investor, I would do everything that I could do. I had a new subscriber this week come on and say that she's so excited that she can't sleep. She's going back and watching the videos. That's the way I would feel. That's the way I would feel. I would go back and watch all my content. I mean, I'm sincere in every one of my messages, and there's little takeaways from each one of my videos that'll help you really kind of relate to the information that I'm talking about and validate it for yourself, right? Good for you, man. Officer Towers, I love it, man. 22 years old. The sky's the limit for you, man. I'm very proud of you. I don't mean to sound condescending, but I'm proud of you, and congratulations. If you need anything, hit me up directly. Make sure you're in the Facebook group. I have been kind of off the Facebook group a little bit because I've got a great community in there that really helps take care of people. But I've just been really, really preoccupied with getting prepared for this move that I'm about to take, all right? What's your take on having a Roth account and a brokerage account from the beginning, or perhaps continue with the Roth and with time trigger the start of brokerage account in order to hit short-term goals? That's one of the best questions of the night, Greenhorn Grill and Smoker. I'm not one of those guys that says that you can't open them at the same time, okay? Where I see people falter is they are opting for the Robinhood first. Robinhood first, Robinhood first. And I've got a lot of people that are coming back to me and saying, Ryan, you were right. I did it in the reverse order. I started the Robinhood account and I wasn't thinking long-term about getting my initial dollars into a tax-protected and wealth-preserved account. The self-directed account does just that. If you want to start the Robinhood account or an additional brokerage account in your bank or with your brokerage house, go ahead and do that. I do this very same thing. I trade in my brokerage account. Last year, I was able to accelerate my earnings by $10,000, okay? Now, I was subject to short-term tax on that money, no problem, okay? I just report that money as earnings, the $10,000. So I paid whatever tax on it to take home the $8,200, and I was fine with that. That's the way I did it. And then I've also got my long-term holdings in my 2 self-directed Roth IRA accounts, all right? What I would encourage you to do is really look at making sure that you can max fund that self-directed account for a few years, get a good amount built up in there. I would say wait until you get at least 10, 25,000, 50,000 even built up in there, because that's when, in my account, 50,000 is where the incentives kick in and you start getting free trades. So I don't want to see you water yourself down and try to pursue a brokerage account when that is fully subject to tax, okay? The dollars that you're putting into the self-directed account, honestly, you want to get that max funded and making sure that you're bringing in enough revenue to build up your savings, which I honestly think that the savings account is probably more important than the brokerage account when you're looking to build your portfolio. When you have debt under control and you have a good savings amount, okay, based on your income, and you have self-directed accounts for you as a single person or 2 self-directed accounts for you and your spouse, and you can max fund every single one of those and you feel comfortable and you've got discretionary cash to where you're maxed out on all 4 of those, then you can go ahead and justify adding that 5th brokerage to the account. But that's the order of precedence and the way I think about that particular question. I do all 5. I'm not going to tell you not to, but at least look at it in an order of precedence, because so many people out there that I talk to do it in the very reverse order of what I just talked about. All right, that's a killer question. Thank you. 5,000 subs, here we come. Ernesto, been one of the loyal subscribers for a long, long time. Thank you, Ernesto. We will get there, absolutely. As a matter of fact, when I reach 50,000 subscribers, I will not go climb a mountain, okay? Sorry, don't expect it. I won't. I won't do that, because this channel is predicated on the success of my viewers. If my viewers and subscribers are tuning into the independent investor channel and they're being hurt by the information, I will shut down the channel immediately with no questions asked. It's the complete opposite on this channel. And the success on the channel is built on the success of my subscribers. No doubt about it. Has nothing really to do with me. I'm just offering information to you guys as a referral. This is what I do every single day, and hoping that you guys can resonate with the message, take and deploy some of this information to enrich your own lives. That's the success. All right. So I will not be climbing any mountains when we reach 50,000 subscribers, when and if we do. Okay. Because the channel's not going anywhere. Thank you, Ernesto. Appreciate it. Could you explain how you keep your money on the sidelines in your account? That's a really, really good question. And I think I'm addressing Big A's question, and it's a really, really good one. And it's a complex question to ask. I just think that there's so many people out there who have either $0 to $1,000 of cash to their name. Look, half of this country doesn't have $1,000 in the bank, half. So you need to kind of assess and say, you know, do I need to work on paying myself first? Okay. If you need to get from 0 to 1,000 to even prove that you're capable of doing what it is I just said and reaching that first incentive level, which is $1,000, do that. Okay. So it doesn't have anything to do with money on the sideline in an account just yet. All right. Once you get that $1,000, I always say, go ahead and start the account if you've got that $1,000 of investment capital. Okay. Now the $1,000 should be in addition to no debt and a little bit of savings built up. All right. So if you don't have a lot of money or a lot of income that you're bringing in per month, it could take you a little bit of time to build that savings up. But let's say you've spent the time, you've cut back some things in the budget, got the debt under control, and you've saved up, let's say $1,000, $1,500, $2,500 in the savings account, and you want to go ahead and parlay part of that into a self-directed Roth IRA account. You can absolutely justify taking $1,000 off of that savings account and pushing it over into a self-directed account. All right. Now, you've got $1,500 left in your savings account and you've pushed over $1,000 into the self-directed account. Your goal in between $0 to $10,000 should be just to get invested. Okay. Your goal shouldn't be to try to keep money on the sideline in case of an eventual downturn, or you want to buy a stock at a lower price. Okay. Because all that speaks to trying to time the stock market. And historically, I'm not giving you information to tell you that somehow people have succeeded doing so. It's actually the opposite. If you're trying to time the stock market, it's never going to work out well for you. But if you have $0 to $10,000 of investment capital, you don't need to think so much about getting dollars invested into the self-directed Roth IRA account, for example, and keeping, let's say, $1,000 on the sideline just in case that time comes up to where you can invest. That's the whole point of this capital over here in the savings account. All right. So if you're looking to get started in the stock market, it's the hardest thing to get from the zero amount up to the first $10,000. I say this all the time. And I don't care how long it takes. Make a goal to get to that first $10,000, okay? And then pat yourself on the back, because mark my word, it is the hardest milestone to get people to in the stock market. So many people, and it's a really, really good question. But that question about having some money on the sideline really kind of takes a lot more merit when you have a much more sizable amount devoted to the stock market, to where, I parlayed $10,000 worth of stock just today. Okay. So I'm trying to get you up to $10,000 of investment capital total. All right. Out of my $300,000 of investment capital, I parlayed $10,000 just today to free up money. Okay. In positions that I had won on. Okay. So it's different. It's a different perspective for someone like me who has a little bit more investment capital, subject to what I feel is a record high stock market right now. So I'm being very, very careful about investing into strength. All right. For somebody that's trying to accumulate wealth and accumulate a share base from 0 to 10 or even $0 to $50,000, you should be looking to aggressively fund, buy, and never sell. Okay, so if you're thinking about having $10,000 and keeping $1,000 on the side to eventually buy a stock at an eventual downturn, you can do that. But I would say that it's probably better to take that entire $10,000, that entire $25,000 of investment capital, mind you, assuming that you have the savings over here, and keeping that money working for you at its maximum benefit. Its maximum benefit, all right? And I find all the time that if you're max funded on the Roth IRA account, I understand that there's no more that you can do in that account to add more to it. But the overlap period between January 1 and April 17th, you can actually contribute for the previous year and you can contribute for the following year, okay? So the prior year and the following year for 4 months, you can contribute to that account. Now, if we get a downturn in February, it could be that you've contributed for the previous year, okay, but you have not contributed for the follow-on year. And I would highly encourage you to keep your cash on the side in the savings account if you see fit, all right? And then it's very, very simple to take some of that funding dollars and let's say throw $2,000 into the self-directed account, all right? It's only possible if you've actually started this account, and that's part of the fundamental difference between a lot of people is a lot of people don't even want to start the account. And you'll have these little interjections of money. Sometimes you get a bonus at work. Sometimes you get a tax return. Guys, for the last 15 years, I have invested my tax return. I've reinvested it, okay? So when I get my $2,000 or $3,000, sometimes $3,500 back every January or February, I take that money and I roll it right into my savings account. And then those dollars help supplement my funding schedule for my Roth IRA. That is a very, very difficult question to answer, and I think it is relative to the amount of investment capital that you actually have. And if you guys are looking to build wealth from 0 to 50,000, be aggressive and go after that goal with some curiosity, all right? Don't worry about timing the stock market. Don't worry about keeping a little bit of pay dirt on the side within your investment account to get a little bit better entry point on an Apple computer. You know what I mean? That line of thinking can get you into the wrong mindset that you can time the market. It is not the mindset that I want you to take. I want you to be strong, make strong moves in the stock market, but make equally as strong moves over here, building up your capital, your savings capital over here. So you're building strong over here and you're building strong over here, but you're not trying to strategically beat the market over here because it's impossible to do that. So why try? Why try? Awesome question. Thank you. Could you explain? Yeah, that's a good question. That was one of the questions of the night, no doubt. I've got Kulik21. Hello, great video with the other Ryan. I appreciate that. Thank you very much. Had some really cool dialogue offline. We should have filmed some of the dialogue we had. Me and him go back and forth when we're talking. Back and forth, man. We're a couple of chainsaws going at each other. It's pretty awesome. I just love him to death, man. I really do. I just wish him the world. And hopefully he appreciates my perspective too, because I've been around the block a few times. We kind of talked about, a lot of people, they can press a little success button over here and boom, they're successful overnight. And I think his big challenge is going to be, really trying to appreciate, how much success he's had so quickly. And I think he will. I think he's very, very level-minded, but I think that would be really tough for me if at 22 years old, I was bestowed this much success, and it's like, good grief, now what do I do? What does it mean? How do you stay hungry, when it's that easy, to hit that. And I'm talking about the perception from a lot of people, all right? I know how hard he's worked. And that's what a lot of people don't understand is this is like, oh, just quit your job and start a YouTube channel. You'll become a millionaire, And it's like, it's a lot harder than people think. It really is. And we talked about a lot of those intangibles, man. I think he's got a really good head about him. I just want him to stay hungry and I want him to keep delivering good content to people. That's all. I want him to be happy. Aside from YouTube and aside from the money aspect, I just want all my friends and anybody who's ever interacted with me, I want the significance of our relationship to be built upon happiness. I want everybody to be happy, and finances is just one small piece to that. There's a lot more that we could go into about happiness in life and things like that. But I do wish him the best. Thank you for that. Very cool. Doing the Friday night thing, I wanted to get in and thank you. And hey, Les, how are you? That's awesome, man. I really appreciate it. I want you to stay strong on your program, no doubt. We got some good entry points on your stocks. Just keep them in there. I hope you guys are really kind of sinking your teeth into your guys' program. I was actually very happy to talk to you guys. That was really a cool opportunity for me, and I'm humbled that you thought of me to do that, and I was glad to help you. Really, I hope you're sleeping well at night. I hope you're having a little bit of fun about it too, man. So it's all about having realistic goals. I think it's about not worrying about what everybody else is doing with their program. I think a lot of it has to do with looking internally and putting the best program in place that makes sense for you. I could care less whether or not it makes sense for everybody else out there, but if it makes sense for you, then you're going to succeed at it, right? Because you have realistic expectations about your program, and it means something to you. You know what I mean? You basically have a vested interest in your program, and I feel like through our discussion, we actually really helped you define that for you and your wife, man. It's really cool, man. Thanks for coming on here and saying hello. I really appreciate it. I've got Ernesto here. Gosh, man, I got a ton of people on here. Holy moly. I'm going to try to scan through here and get most of these. Great collab video. Awesome stock picks as always. You're welcome. I've got Lee Nguyen. Can you recommend 3 or 4 stock long-term holdings suggestion for my watch list to balance out mine and my wife's portfolio? My wife has CVS, good, Procter & Gamble, Wells Fargo with a majority in VO. Oh, perfect. I have Disney, Duke, J&J, and a majority in VTI. What do you need help with? Good grief. I would like to see Apple in that mix. You are good on that. J&J, a couple of my favorites. You've got financial exposure. CVS I'm okay with. Duke I'm okay with. That's good. I really think you're good. I really think you should probably try to pick up some Apple computer and add that strategically to your portfolio. I think you're a little bit underweight, but if not, you don't have any exposure at all to the technology sector at all. You could probably go with a little telecom name as well, and a Verizon VZ ticker symbol, and Apple AAPL, both New York Stock Exchange. I know somebody else is probably going to pop in here and throw some killer stock picks your way, but I think that's an awesome portfolio. I don't want to water you down too much. I think those holdings are really good. I could probably throw a Walmart in there as well to get you some staples and discretionary exposure. I could definitely probably throw a Kraft Heinz food in there as well for either you or your wife. So a couple really good dividend payers there as some options. All right. Both portfolios has 3,000 to deploy. Okay. Yep, I would definitely. Apple's pulled back a touch. You're getting a very rare entry point on Apple right now. You can see my mind work, and I'm scanning through my thought here, but your portfolio is actually very strong right now. And don't hesitate to keep a little bit of that cash on the side. In respect to what was just posed to me in the question above, if you wanted to put a little bit more of that capital to work, you could do that. And add those additional names in there, maybe Walmart for your wife and maybe yourself with some Apple. I think that would probably go a long way, but you have a killer start on your portfolio. Thank you for sharing. That's awesome. Six Flags is awesome stock. It's really awesome. It tends to be off my radar a lot, but man, they make good money. They've got a really good dividend, and they make money hand over fist, man. They run a very good business. And I'm going to have to revisit Six Flags. I tend to think that they're somewhat cyclical, but in Southern California, they're good to go, and they're all over the U.S. And they're very well managed. They make a ton of money, and they pay a killer dividend. I don't know if I would buy Six Flags over some of the cornerstones I talk about. But certainly you could probably pick up a Six Flags if you're looking for a good dividend play, maybe a short to medium term play where you're looking for some capital appreciation. You pick up Six Flags. From a smaller position perspective, again, I want to see the weightings in your portfolio. I want to see the weightings toward technology, discretionary staples, healthcare, that type of thing. That gives me another idea for you, Lee. You probably need to look at the healthcare sector as well. Oh, nope, you got J&J. I strike that, so you're good there, okay? But I also own Merck as well, and Merck is the leader in cancer research right now. I also own Pfizer. So if you want to add some dividend power to your portfolio, you could look at adding Merck as well. Hey, Ryan, good luck on your travels. Thank you, Brent. Appreciate. Welcome to the channel. I really appreciate your support over the last year, man. I don't get to the other channels. I told Scribner directly. I was like, I don't watch all your videos, man. I'm sorry. I don't have time to do it. And he was like, yeah, no, I feel you. I get it. We're all really busy. I've got Dave with Average Joe Investing right below you there too, man. So I've got two of my sponsored channels in here, man. I speak like I'm somebody. I'm really not. I just think that I'm tickled pink to know you guys for sure. I think we've got a really cool community. I had one of the one of the comments on the Ryan Scribner collaboration say it's kind of cool to see this tight-knit community. I agree. I think it's pretty cool. I've never met you guys, but I really think your sincerity comes through the channel, which is really a lot of the reason why I endorse both of you guys with regard to the content. It doesn't really have a lot to do with what you guys talk about in the stock market, right? But I just think you guys are genuine people, and I think people can really resonate and relate with that message that you guys bring to the table. And I just want to thank you guys over the last year a ton. You guys will continue to be sponsored channels on the Independent Investor channel, and hopefully we can kind of grow this community together because at the end of the day, I'm very aggressive on making sure that this message is aimed at helping people, no doubt about it. And if we're helping people, then I'm all about it. Berkshire B does have some Apple. They have a lot of Apple, actually. That guy, he owns so much Apple stock, it's not even funny. I think what it would be to be Warren Buffett for just one day. It's just amazing. I know a fair amount about the mobile market. Just curious about your take. I may have missed it if you've mentioned it before, but what are your thoughts on AT&T and the Time Warner deal taking on a lot of debt? Yeah, I'm worried about that. It's the only choice they had because they can't grow, I mean, the CEO is up on the deal. I thought that once the deal went through, the stock would actually react a little bit more favorably than it did. But it actually reacted in a negative manner because of exactly what you just talked about, the amount of debt that they're taking on. And I don't know, man. I'm a little stuck in AT&T. I think I'm probably going to get a Cinderella run out of AT&T. I'm accumulating shares right now. I'm only down, I think, less than 10% right now, so I don't mind holding the position. It is one of my worst stock picks of 2018, Dave, to be honest with you. Would I invest in the stock right here? Yeah, I would. I sure would. I mean, I think AT&T is trading at 6 times earnings. I mean, Comcast is the same exact thing. And something's going to shake out here. One of those two are going to win the bid, for Sky networks and also 20th Century Fox assets. I mean, Disney is not the only rooster in the hen house anymore. So it's going to be interesting to see. I think Disney's deal is better structured for the 20th Century assets. But Comcast came right over the top with an all cash offer, more cash than Disney, but actually the stock deal is a little bit better for the Murdochs who actually own the 20th Century Fox assets there. But who knows? Who knows what's going to happen? I've been very disappointed in the entire sector. They're very out of favor right now. I certainly would pursue other options right now. High growth FANG is where it's at right now. Do I think they're overvalued? I do. I really do. So when you compare and contrast going with an overvalued red hot sector, and I've got FANG as Google, Apple, Facebook, and Netflix, right? So those 4 stocks, outside of Netflix, which I won't invest in, I think Google, Facebook, and Apple, all three are actually inexpensive out of FANG. But when you take it a step further and you start looking at the high cloud plays, CRM, Salesforce, and you look at NVIDIA on the chip side of the house, and some of those stocks that are just been on fire. Tesla's been on fire, and I don't understand it. Another stock I won't invest in, but I agree with you 100%. And it's like, if you look at it and say, okay, well, I'm not going to invest in the stock because it's got so much debt, you'll end up being wrong, and the stock will run up 8 bits. You know what I mean? And we'll be talking about it in the low 40s, as being a viable powerhouse because they've acquired both DirecTV and Time Warner, which I think were very favorable acquisitions because they're not growing their legacy business. So we'll see. I mean, they've created a powerhouse of a company, and I've read a lot of reports actually viewing this deal as somewhat favorable. So I'm stuck with 100 shares of the stock right now. I'm down 10, 12% or something like that. I'm going to continue to collect on the dividend. And it's just one of those eyesores in the portfolio right now. I mean, I'm killing it on some other names, but gosh, I got in at 37 right here. It looks pretty attractive. It actually has run up the last couple days a little bit silently. It has silently run up a little bit and is approaching the mid 30s right now. So I'd be very, very careful of just writing off AT&T. But you're exactly right. I don't know if I would pursue the stock right here if you don't have a good, well-diversified portfolio to kind of back yourself up on. If you wanted to take a little bit more of an aggressive play right now and take a stab at AT&T, I'm all about it. I own the stock too. So, here's to hoping. Hopefully things work out and we end up back toward the 40s, mid 40s. That would be awesome because I'll sell it and take profit then. So we've been going for just a little over an hour. I'm kind of worked down here. Would you like to see another portfolio update vid from you? Will there be a live chat next week from your new local? No, there will not. I'm actually moving next Saturday. I've got goods this week. I will be taking a pause on the channel. Thank you for asking. You guys have been great. And honestly, this is not one of those channels that I like to just come on here and just talk about everything under the sun constantly. I'll never do daily uploads. No way. I won't. I think about my topics carefully before I put them online. And there's a lot of videos. If you guys haven't watched my entire catalog of 175 videos, I kind of cringe sometimes because I answer a lot of questions during the course of my video. And then spend some time going back and reviewing that content. Skip the ads. I won't get paid a dime and you won't waste any time of your own, but I feel like the content is good. I really would love to see you guys really kind of get into some of those videos that I put through, which I feel like is some of the coolest content I put on, which are some of my most unloved videos, to be honest with you. But yeah, I will be taking a break on the channel probably over the next couple weeks until I can get settled in. And then I will be out in California for a business endeavor of mine I've got to do with my work. So I will be off the channel here for a while. I just ask you guys to remain loyal to the channel. Don't unsubscribe. I don't really want to start over from zero again. But certainly go back, review, continue to share the content with people out there that you guys know, because it's a cool tight-knit community of folks who's pushing out a lot of good information on how to invest, where to invest, what to invest in, and help people if they don't know a lot about the stock market kind of learn themselves up a little bit. Dave, an average Joe investing's got between TWC and their other purchase of dying. Yes. Yeah, the DirecTV acquisition was a couple years ago, I think, Dave, right? So they're just enormous. They are an enormous business, one of those legacy businesses. And we've seen what happened to General Electric. And I can't see another General Electric and AT&T, but who knows? Stock investing is a fickle place. Honestly, I have the same concerns you do, but I mean, what the hell? We can talk about it and come to two different consensus on the stock, and it's going to do what it's going to do, I actually think it's got a pretty good basis of support here at 30. So hopefully I see 40 in its future as opposed to 25. So we'll see what happens. I'm invested 15,000 American, 30,000 into one company, been waiting around a year now. Also made a heck of profit out of it so far. So do you feel it's wrong to invest into one company? Well, you're certainly not achieving diversification. You know, who am I to say that it's wrong if you're making money? Honestly. I mean, if you're making money, so be it. I would just, you know, strategically, you are very good at picking good stocks. Not everybody has the fortitude to put that kind of money into one name. I don't. Okay. I would never take that much money. I've put 50,000 on 3 stocks 3 different times. I made money each time. It was heart-wrenching. It was very difficult for me to do. My largest position right now, I believe, is Google with $12,000. 12. And I own over 30 stocks. So it's all diversified, you know, across the board. And I have, you know, 300,000. So it lets you give you an idea of how much cash I have, how much position. Most of my positions are around 3, 4, 5, 6,000 bucks. That's what I have in each individual name, with a very, very concerted effort to try to achieve diversification within my stock portfolio. But to each his own, you know. You're going to know the answer to that, Doug, if you take a big haircut in one of those stocks, and it hurts you bad, and you're going to say, geez, you know, maybe I should have diversified a little bit, you know, or you invest in a stock and it really gets punished. You know, you may validate it for yourself, but who am I to tell you you're wrong or right? I don't do that on my channel. I really don't. Because if you're making money, you're right. Stock market, there's an infinite number of ways to make money in the stock market, and you're just exploiting one of them. I'll be the first to pat you on the back. I love seeing good people make moves in the stock market and make money, because there's a lot of different ways to do it. So I've got Nyella on the line. That's awesome. She always comes on and supports the live feed. So hi, Ryan. Great video and collaboration. I hope you guys can do more. Yeah, I told Scribner, I said I probably won't get to see him again unless we're probably in Vegas together doing some sort of live conference in front of 5,000 people. I love talking in front of people. I really do. Public speaking is actually probably one of those things that I've evolved into getting really good at. I'm pretty good at it. And I can energize an audience pretty easy. So this is just a small piece of what you guys are kind of seeing. But I really like, I'd love to talk this topic someday. If I've ever given the opportunity, I will jump all over it. But I don't foresee us seeing each other for a while. Yeah, that's actually why I drove that far to say what I needed to say to him in person. So it's kind of cool. That 30,000 was Canadian. Doug Whitaker. Why? Just curious. Yep. What do you think of General Mills? Seems to be a good value right now. That's Brett Ray. I do. I think you could take a stab at General Mills. And those are the types of things that you guys need to look at when you're starting a portfolio, man. Look at these good quality companies that pay a nice dividend that's given you a really, really good entry point on the stock. General Mills is probably giving you a really good entry into the stock. When you're a value investor, you know, they can hover at lows and they can hover around highs for months at a time, even years at a time. So when you're provided an opportunity right now, you know, to get a good entry in the stock, Procter & Gamble has just provided that entry. Johnson & Johnson is providing that entry for you right now. You definitely, Walmart is providing that example right now. So when those value companies give you that opportunity to provide those good entries to them, you really want to take advantage. And I'm all about General Mills right here. I don't own the stock. I do really like General Mills. And I do own Kraft Heinz Food as well. So that's another couple names to take a look at. But I think Kraft Heinz Food is giving you an absolutely fantastic entry point right here as well. All right. For me, you have to have patience to win big. My rule. God, yeah, she's good on you, man. I don't think I was blessed with patience, man. That's my problem, Doug. That's my problem. I don't have patience enough. Can you do a quick minute or two breakdown? If you had 15 years to invest for a college fund, what would your strategy be? Yeah, no doubt. 15 years to invest for a college fund. You guys, I don't know if you guys know it or not, but I do have 529s for both of my kids, okay? If you were investing for children, that is definitely a way to do it. So any money that you made in way of capital appreciation and dividend payments, they are going to be tax protected if you pull it out for college. Another thing that I talk about is the UGMA. I talk about this on Investing for Kids. I came out with a video talking about this very, very topic. All right. So 15 years to invest in a college fund, what would your strategy be? My strategy would be for very safe, fund as you go. All right. I only do, I think I do around $75, $50 every other month for my child. Okay. And it's grown significantly. So she's 11. So I've invested 11 years for her. And there's about $14,000 in that account. So that gives you an idea. I own 4 mutual funds in that account. Okay. Would I recommend you do that? No, but I'm just giving you kind of a benchmark to think, okay, Ryan said 11 years. He was able to save, 14,000. I assume that it's probably going to double for another 7 years. That'll put her right at 18 years old, getting to that college age, 18, 19, 20 years old. Now, I expect that my daughter's going to maybe go to community college first, if necessary. I expect that there's going to be some scholarships in the line. So, but your question is about 15 years to invest. I would invest it in the lowest cost Vanguard ETF that I could find, and I would pick one. I would pick the VTI. That's what I would pick. Right now, you're getting just as good a diversification as you can possibly get in the VTI. You're looking at an expense ratio on that ETF of 0.04. So I would probably house the VTI in a 529 plan if it's for a child that you're speaking on behalf. So thank you, Doug. That's an awesome question. I hope that helps. I give you an example from my portfolio, okay? And you think, well, that's not a lot of money, right? 14,000 for an 11-year-old. That may be true, but I've got some things going with myself to where she's going to have additional fundings as well through the military. Okay. I'm talking about my, SG, not SGLI, but my, I'm drawing a blank. You guys will hit me up and give the answer, but it's basically my college fund that I'm allowed. I split it between my kids. So they're going to have that money as well to help them with college someday. If they're eligible. I mean, they've got to work for it, and I don't want to give them everything that they have. So I rewatch all the videos to absorb all the information, always learn something you might have missed the first time. Yeah, I really appreciate that. I actually watch my videos to be critical and make sure that I'm delivering the information, and sometimes I'm really disappointed because I'm still evolving, in understanding what you guys need, how I can deliver it to be, the most beneficial to you guys. That's really the key to me. So I do really rewatch that stuff as well. But I watch it with a very critical eye, and I'm like, oh, why did I say that? Or why didn't I say that? But certainly I'm glad I put my heart into it, and I'm glad you guys find some value in it. That's really cool. Can't open a Robinhood account in Canada. Wow, that's interesting. I did not know that. The person right above you can benefit from that. I think Nyella invests in a little bit different way. And I think Canada actually has an equivalent of what we consider to be a Roth IRA in the US. I don't know the name of it, but I've dealt with a few folks, viewers of the channel, who have hit me up with that term. And I think they do actually have a Roth IRA up there as well. Do you have a few favorite medical devices plays? Yes, Medtronic. Medtronic, MDT. I think I recommended Medtronic a ways back. Intuit Surgical is probably the best in breed. It's not a cornerstone that I would play. I would rather see you go with more of your traditional healthcare play in Johnson & Johnson or Merck or Pfizer, just to get your feet wet. But Medtronic is my favorite to answer your question. MDT is the ticker symbol. Thanks for the clarification, Ryan. Should we do any alterations with our 401k, like change the fund plan or just let it ride as set by the company? Plus, could you elaborate on LMT as a stock? Yeah. I bought Lockheed Martin this week. I bought a big position, actually. I think I bought 20 shares, and you think, okay, well, that's not a big position, but at $300 a share, Lockheed Martin is a beast. I love their defense contracts that they're drawing from. They just coordinated with Raytheon, which I believe is just as good, if not better, of a defensive stock. But the contracts that they execute trades at a fairly good multiple in response to the industrial sector. Now, this is part of the defense sector, and it's a stock that I've been wanting to own for a long, long time. So I went ahead and took a 20 share position, pays a good dividend. I think it's 1.9% in Lockheed Martin, and it's a long position for me. I needed a little bit more industrials exposure. So I was actually looking at the defense subsector, and I actually picked up all three of them. I picked up Northrop Grumman, Lockheed Martin, and the other one, it's escaping my mind right now. Not Honeywell. I already own UTX, but there was another one I picked up as well. But anyway, yeah, Lockheed Martin is fantastic. Don't start charging like some of those pricks out there. You know, yeah, I've had a lot of people tell me I need to, and it's like, no, thanks, I'm good. I don't want to piss my audience off. Here's the thing, Doug, and that's a really good point you bring up. So here's the deal. If I sit across from you guys and I build an audience of, let's say, 50,000 subscribers, and I go climb a mountain and I have a revelation to start charging people, I don't know, let's say $100 a month for a bullshit subscription thing. My problem with that is I don't need your money. You need your money. And I've said this on videos many, many times, okay? You guys need the money. If I'm sitting here talking about the importance of reducing fees within an investment account from 0.10 to 0.04, what in the hell good does it do for me to sit across from you and say, oh, my opinion is so valuable, or my information is so valuable that you need to pay me, let's say, $100 a month to get that information? Here's the thing, and I'm going to give you just a secret. I just came out with I did a piece of content about a week ago. I filmed it. It's not released yet on YouTube, but it's talking about, the title of the video is going to be Stop Wasting Your Effing Money, okay? It's going to be Stop Wasting Your Effing Money. And I talk about this very topic, okay? I do. Because here's the thing. If you are going to offer some sort of service for compensation, that service better be unique in nature, and it cannot be something that is just as easily identifiable or searchable online. It's that simple. Now, I think my content is really, really good, and I'm hard pressed to challenge you guys to find anybody out there that is offering information on the self-directed investor line, okay? There's not a lot of people. There's not, okay? But here's the thing. If I'm going to charge $100, that almost warrants sitting down with somebody every single month and going over a comprehensive financial plan. I'm talking about identifying debts. I'm talking about strategic financing. I'm talking about strategic financial worksheets done up with the customer. Okay, I'm sitting across the table in my office doing that level of service. I'm looking at dependents. I'm looking at setting up a living trust. I'm looking at all levels of insurance. I'm not a big fan of long-term care anymore, but I'm talking about a comprehensive, holistic financial plan. All right. I'm not just talking about blah, 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 shooting off at the mouth a bunch of crap that really doesn't give people any benefit whatsoever. And the people who are paying $100 a month are stupid. Sorry, it's a scam, and it's a waste of money. And a lot of people would say, well, Ryan, it's not a scam if somebody's offering a product and therefore somebody gets a bullshit. Get out of my face with that. That is such garbage. It's not fair at all. So in response to your comment, Doug, I will tell you right now, this channel will never, ever charge anything whatsoever. Now, I've been told I need to put forward a course, okay? Now, I may put a course forward in due time, but I am going to spend a ton of time building that up, and I'm going to build it up in my own unique way to make sure that somebody can really follow the roadmap that I've followed myself. The problem is I don't think a lot of those folks that are offering these BS $100 subscriptions, I don't think they have very impressive portfolios, man. Show what you have. And this individual that I'm talking about, you guys can kind of know if you read between the lines who I'm talking about. You know, people have asked all the time, like, show what you have. Like, you keep talking like you're some sort of guru on the stock market, which I don't believe in at all. Show what you have, you know, and show how you accumulated that. I'm not talking about taking YouTube earnings and somehow misconstruing or misrepresenting yourself to your audience and basically saying that I've traded that money up in the stock market and here now I'm sitting on $150,000. Okay, I came out with a video on this very thing. It's called Bait and Switch. You guys should go back and look at that video because it's exactly about this individual, and it's exactly in response to this very question that I have. And I just, the bottom line is, if I'm going to preach about the importance of reducing expenditures, reducing fees in the account, reducing everything that has everything to do with restricting your program, then why in the hell am I going to sit across from you guys and actually ask for your money? Okay, it's the last thing I want to do, and I won't do it. It's that simple. Thanks, Doug. Appreciate it. You struck a nerve with me. I appreciate that. When you reach 50,000, you'll have helped at least 50,000 climb that mountain themselves. Amen. Right? You know, you can always, you know, what is it? It's the fishing analogy, right? I like to think that I'm showing people how to fish, you know, and not showing them how to eat, you know, or how to cook the fish or whatever the hell the analogy is. But, you know, I really want to provide people the opportunity to really validate and think for themselves about how to employ and deploy this information into the stock market themselves, man. And I believe that we're doing that. Dave, thank you much, man. I appreciate that. I think it seems like kind of a pipe dream right now. It really does. I'm happy with the growth of the channel. But honestly, for the 300 or 400 or 500 people that really are loyal to the message and they're the ones sharing the message, I'm not all about the 5,000 subscribers. I'm about the 500 people who are loyal. And that's a fact. You can take that to the bank. I mean that wholeheartedly. Kind of scouring through these last few questions, guys. I'm going to try to wrap it up here at the end. I've been doing the same. Found Ryan's channel for 3 months ago. Guys, thank you so much. Guys, I really appreciate you going back there and reviewing that content, because if you can review that content, you can kind of speak the same language and we can look to evolve, you know, kind of together in what we're trying to do with our program. It's very, very cool. I'm a risky investor. He reminds me I'm a risky investor. You know you're a risky investor, but I tell you what, the last thing I want to see is somebody get hurt in the stock market. Don't ever think that it's a humbling place to invest, man. I think I've got stock picks licked and they go down on me, and it's very humbling. And I figure if I'm going to lose in the stock market, I'm going to do so with good quality stocks that I can kind of wait positions out and cash in my chips on my terms. I've got Smeek. Hi, Ryan. How are you? I'm good. That's the easiest question that I've answered tonight. Thank you, Smeek. This group's been hard on me tonight, man. Good stuff, though. How does John Deere Royal Caribbean, good company, Royal Caribbean. I don't invest in cruise ships. I don't invest in the cruise industry. It's one of those industries that I just choose not to touch. That's by choice. Apple, Disney actually is part of a cruise, so that's kind of an exception. Walmart and Blackstone sound for future positions. I also need a good oil energy stock to hedge the cruise line when oil prices climb. The starting position in the oil industry, you could probably choose between Royal Dutch Shell and Chevron. Okay, those are 2 out of 3 that I own. I also own ExxonMobil, and I think you could do fine with ExxonMobil. Any one of those 3 as a cornerstone. Try to aim for 9% of portfolio exposure. And you are also looking to add Blackstone. Yeah, you could do that. I would probably like to see you get into more of a staples name. You got Walmart, that's good. Disney for a discretionary. Apple and Blackstone, I would assume, is going to fill your financial exposure there. I certainly like Wells Fargo, I really do, but I really like the Blackstone group. here in the low 30s. I really do. I really think they are setting a long base. And in the meantime, you're going to enjoy a higher than average dividend. I've owned Blackstone Group for the last 5 years, and it's done nothing but pay me a fat dividend. And if I get just a little tick of capital appreciation, it's really going to backfill some of those years that I've had where Blackstone's been flat for me, and that's fine. I'm okay with that. But I think you've got a killer start there. I love every one of those stocks. I really do. But that'll help you a little bit on the oil side of the house. I would also look, oh, you've got John Deere, that's good. I would look at adding a healthcare name to that. I think I would round out that portfolio and go Johnson & Johnson in that portfolio. Okay. So that's what I would look at. Do with Royal Dutch Shell. A lot of European exposure with Royal Dutch, Chevron or Exxon and J&J in that portfolio. Killer question. Thank you very much. Thanks for all the videos and the help. You're very welcome. Yeah, Apple down 1.5 in a week. I think they'll be over 200 next. Yeah, they will. I'm going to beat the news of 20. Yeah, absolutely. They're going over. 72.43 right now. Wow, that's crazy for Six Flags. I haven't really watched it for a while. Is blowing up. So happy to have been along for the ride. Thank you, Avi. I appreciate. Hope you have a great travels and hope to see you again. Yeah, you guys will. I'm just taking a break from the channel. I've worked really, really hard on the content the last year, and 175 videos, man. That's a lot for me. I do all my own editing. I do all my own thumbnails. And you guys have no idea how much work it takes. Maybe you do. I don't know. But it takes a lot of work behind the scenes to kind of put out this content. And I'm going to go ahead and take a little bit of a break right now and close the chapter on the New York chronicle of videos that I've put forward. The new chronicle, I'm going to take a twist on it and do it new from the new location. And we're going to have some fun. I've got some killer ideas to take the channel to continue to evolve with you guys. When I start my self-directed Roth IRA, what percentage would you suggest I fund with the ETF, and what percentage with single stock to fulfill the 5,500 max? As a new investor, I really think the sweet spot, if you had the first 5,500, the sweet spot for me for a new investor, if I was sitting in your shoes, and I'm assuming that you're a little bit younger than me, I'm 40. So if you're in your early 20s, I'm talking about Nesfit training right there with a very, very good comment. As a matter of fact, I should probably just make this as its own video. But I really like the 75% passive and the 25% stock. Okay. Now, if it is your only account that you have, it's fulfilling my idea to start and have the majority of your assets in a passive ETF. You can choose between the S&P 500 or you can choose between the VTI, which is the total, the Vanguard's total stock index. Okay. But that's the ETF. Okay. So those two products on the 75% side with the remaining 2,500. Okay. So $4,000 in that. And then you've got the remaining 1,500. You could probably take starter positions at $750 each. Or $1,000 and 500, whatever you choose in two stocks with the remaining 25%. Now, if you were unhappy with the amount of stock you could buy with that 25%, you could go with a 50-50 blend. You could be fine with that. And that'll drop you down to around $2,750 half, and $2,750. You could bump your stock allocation up to 3 stock picks, 3 at a 50-50 blend. So it just gives you kind of an idea about how I break down money. You could really justify doing either one of those two programs. Now, if you had a 401k in place, that would change my answer to you a little bit, because you could be a little bit more aggressive with the self-directed Roth IRA account. But if you're looking to allocate that properly in the SD account, and that's your standalone account right now, that's what I would look at. 75% passive and 25% stock, or a 50-50 blend. Okay. And that way you just cut it right down the middle, $2,750 to the VTI, $2,750 into 3 stocks. I would buy Procter & Gamble, Apple, and Johnson & Johnson. Those would be my 3 starters. And I would split the allocation amongst those 3 as appropriate. All right. That's my recommendation. Very, very simple. That's the fun part of it. But you got to get that account started and you got to get the thing funded first. Okay. Not very excited about allocating as much as you can, up to 10,000 in VTI, ITOT, VOO, IVV before deploying other cornerstones. But when starting, put 4,000 in total and bought my first shares of Apple. Smart. That's very, very cool. I've got Bob Goldcat right below. I'm going to wait for more of a decline before I buy more stock. Why did silver drop 4%? Good luck with moving. Thank you very much. I don't know. I would buy silver right here. Silver's been a buy for years. I don't know why it dipped. I would love to add more silver exposure to my portfolio. That's exactly what I need. And I think that's smart, Bob. I think you'd be okay with scaling into some of these good buy points in some of these stock. I think you could buy Walmart right here at $80. I don't think you need to wait for a big pullback in these stocks because you may never get them. Now, high-flying tech, now that's a different story, but certainly if you were looking and interested in buying a position in a Walmart, for example, 10 shares will run you $800, split it in half, 5 shares at $400. You know, you could start those positions, start those up on dollar cost average, you know, and dividend reinvestment, and actually become an investor in some of these good names without having to just sit on the sidelines this whole time, because that can be frustrating for me because I'll sit there and wait on the sideline and I'll never get that pullback in the stock that I want to buy, you know. But it's not like a stock's down 40% and you're able to step in with a bigger chunk of money and put it to work right away. I agree with you. Valuations are getting a little bit stretched again on these single stocks, but you know, good luck to you. Ryan, I know you think Microsoft is on a tear right now. What do you think of Nintendo and Sony? I don't invest in either one of those, and I don't know much about them. I know there was one channel creator quite some time ago that I tuned into for a while, and it was Ollie's World. He had a channel. I think it was a Canadian creator. Spoke very highly about Nintendo, but I don't have a lot of information on those two. I wouldn't invest in them. I'm not a big fan of investing in those two companies because I already own some of the other big tech, Cisco, Apple, Intel, some of those companies. TFSA, that is correct. Thank you, Nyla. I appreciate that. So any of you guys that are tuning in from Canada, that's the basically the equivalent of a Roth IRA to the United States. That Canada has the same thing. So very cool. Medtronic's my favorite as well, and they actually have a partnership with Mazor. Medtronic has a nice 46-cent dividend as well. Thank you for validating that. That's awesome. Avi, what is the name of the company that has the ticker symbol ITOT? Thank you. Totally agree with you, Ryan. You're welcome. Thank you. Awesome chat, Ryan. Thanks as always. Happy Father's Day. Happy Father's Day to all you guys. I'm going to go ahead and sign off here. All the best to you and your family. Thanks, you guys. I appreciate it. This will be the last live feed from New York City. Guys, thanks for so much for all the support that you guys have given me, man. It's really helped. Your thoughts on companies like Honeywell or Cintas as long-term investments? Well, Honeywell was the one that I didn't buy this week because I already own United Technologies, but I did buy Lockheed Martin, Northrop Grumman, and Raytheon's a good one too. Honeywell is right there. So I'm addressing Dalton. You'll be the last question. So very cool. Thank you for that. But Honeywell, you could buy and own it long term, man, guys. So thank you so much. So I'm going to go ahead and sign off right now. We've been going for about an hour and a half. It's really good. Thank you guys for making this live feed such a big success for me. I really appreciate all the support. I want to give a shout out to the financial information. Brent has a channel I sponsor, as well as Dave with Average Joe Investing. If you guys are new to my audience, please kick over and support, drop the subscribe to their channels. I always try to help and support their time and coming on here. It's an every Friday thing. Guys, just stay tuned for future live feeds. I will pop on here probably in a couple weeks, maybe. It may be longer than that, but in the meantime, I'd like you guys to remember kind of what I've kind of offered on the Independent Investor channel over the last year or so. It's really taken a great evolution of offering this content. I've pushed out a lot of really cool videos for you guys. Think about and resonate with the message. Make it work for you. And we will pick up at some point in my new location. Thank you again for all the support, guys. Have a good rest of the weekend, man. Happy Father's Day to all the fathers out there. Thank you so much, guys. I'll talk at you later.